Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On this show today, we are joined by Paul Yook. He's the co-founder of LifeSci Index Partners. He's a biotech guy. We're also going to talk about some earnings we had from yesterday, Nike, HubSpot, a breakout in Intel, and we'll take your questions from the chat. As always, Joel, what's doing in the spoos?
Are we up and running? I just want to make sure.
We are up and running.
Okay. All right. Well, we are doing okay in the S&Ps here. We are trading in the green by 4.5 points. Your pre-market high, 25.01 1/4. We have a lot of highs up in this area, so we'll be keeping an eye on that. 25.07 1/4. That's your all-time high. Pre-market low, 94.25. You have crude in the unchanged here at 51.88. Gold has lost 1,300, trading at 12.9230, and silver down 2 cents at 16.86. Dennis, how are you doing on this Wednesday morning?
I'm doing pretty good here, Joel, and sounds like you're doing pretty good here too. What's going on?
Not much here. Just ready to fire away on our pre-market show. We got some good movers. We got some earnings to talk about. We got some ratings to talk about. And we also could just talk about this quiet market.
Yeah, the market, I don't know if it's that quiet here. There's different stocks that keep moving here, obviously, in the news. We had some news last night as well. We had some wild movers there. The overall S&Ps just keep chugging away. But when you start breaking it down and looking, the techs were wild. I mean, we had the big sell-off a couple days ago. They did bounce back a little bit there yesterday before kind of meandering back down towards the lows. So it's interesting, to start analyzing these tech charts here now because, we've had, a significant sell-off in a stock like Amazon. It kind of rallied there yesterday morning, but then gave it all back in the afternoon, which we were kind of hinting that it might do. But, Amazon's still holding on to that 930 level. So you got to say, I'm still going to say it's support is support until it's broken. And that's still major support. And
Apple as well filled the gap from the 150 level. We had talked about that's where it came from. During earnings, boom, 149 and change, you fill the gap. Now going back up here, and I'm not sure who it was, but one bold analyst, I remember said, you got to own Apple here. I don't know, maybe we could dig through the archives and find out, but he said you absolutely have to own Apple here at 150. Nice technical move, a gap fill. Now we're heading back up.
It bounced off support. So that's good news for the overall market because Apple has been one of your leaders and it did hold its support. And there's a lot of other stocks that have been holding on to their support as well. We've had a few breach it, but of the major levels here, like Nvidia was still holding the 170 yesterday. That's absolutely critical that it holds that level. It basically did a double bottom yesterday, if anybody's paying attention. 170.16 the low 2 days ago, 170.35 the low yesterday. That's good news as a technician because that's the level that we broke out from a week and a half ago. That's the level it needed to hold. It's put a little double bottom in place there from the last 2 days. So that's a case for the bulls as well. And Nvidia has definitely been one of your leaders. So as long as Nvidia holds 170, Apple holds 150, Amazon holds, which we just talked about, the 930 level, we're okay. They start to breach those support levels, Katie bar the door.
And I just want to bring up, you talk about the consolidation and in the S&Ps. I'm just going back here for, I'd say, at least the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Last 12 sessions, Dennis, we have traded in a 22-point range. Remember the good old days during the financial crisis where, your opening bar was 20, 30 handles. Now it's been in the range for the last 12 sessions.
Let's jump over here to individual stock news, and we're going to stick with the tech theme here, at least early this morning, because Micron had earnings, and Micron's earnings were good there. Stock actually got the big pop and then the big drop. Believe it or not, the stock actually went red before popping again significantly here. We are hanging out up near the highs. We've had some positive commentary from multiple analysts this morning here. Spencer, give us the details on MU.
Q4 adjusted EPS of $2.02 versus $1.84, sales of $6.14 versus $5.96 billion. So beat on the top, beat on the bottom. Their Q4 guidance is EPS coming in line with the estimate. Sales guidance for Q4 coming in line as well. So inline guidance and a beat on the earnings, but we saw this yesterday. I forget what stock it was now, but Red Hat, right?
But it held on. It held.
Okay. Fair.
So it did hold. And this stock, and Joel, I don't know what they said or if they said something on the conference call, but it had the big pop. Talk about the after hours action, because we got up over 36. Then we sold all the way off, and it went flat, and then it rallied all the way back up again. Yo-yo action there for Micron, but talk about the action.
Well, you had the peak at I didn't quite get to 36, 35.91, and then you broke under $34, 33.70, and now you're back up at the highs for the session. Couple numbers to keep an eye on here. As long as we hold 36, I like this. The highs, not from yesterday, but the prior three sessions, 36.15, 36.22, and 36.25. And then the big number on the upside, which you haven't hit yet, is 36.60. And I believe that's a 17-year high in Micron. So there are your levels. Going back on the monthlies, you got some good levels to look at.
Go back further. So it's just funny when you say 17-year high, and we can't say all-time highs there. And 36.59 would be the level. But talk about where this was in the tech bubble of 2000, when everybody thought, techs were taking over the world. What was the high?
97.50, Dennis.
So here you go on Micron, and this shows you, if you buy in these bubble prices, not saying it's a bubble in Micron now, but when stocks do get into these bubbles, they sometimes don't come back. And here you are 17 years later, and you're still down 50% or 60% on your investment. I guess that's an argument for the bulls, because you could say, well, this was $95 17 years ago. It's still got a hell of a long ways to move. The multiples back then, we always, said, and this is what they were saying, back in 99, 2000. It's fun to bring this up every once in a while. Everybody said, multiples don't matter. PE multiples don't matter anymore. Valuation doesn't matter. Warren Buffett is old. He was always a value guy. And this is what was being said. Like, I can remember this, in the year 2000, in 1999, before the tech bubble burst. They were saying, you've got to value stocks in new ways now. It doesn't matter as much as, profits. What matters is growth, and that's it. And I always say, profits and PEs and valuation doesn't matter until it does. And in 2001, it mattered. It mattered big time. And valuation in the long run is still what drives price. So when you pay these, crazy multiples of 100, 200, 500 times, you better hope earnings are growing like crazy, and they better be growing to play catch up, because if they don't, at one certain point in time, when growth starts to slow, those stock prices come back in.
And just talking about old tech here, what we talked about with Mr. Shaheen yesterday, Intel, 6 highs right at that 37.30 area. We poked our head through it, Dennis. And I have to classify.
Looks like a breakout.
Yeah, it is. It just, you got that pesky high. I don't know how we got up to 38.45 at the beginning of the year, but we did. But cleared 6 highs there. That's good enough for me. It looks like Intel here, chance to move up into the $38 handle. Let's see what it's doing in the pre-market. It didn't settle above there, but man, old resistance, new support here.
I think it tests at 38, maybe even today. This thing's hot right now.
I'm not touching you on this one.
It's hot right now. Intel's hot. I like it. It's a breakout on the chart. I like this chart here right now. Talk about, just for fun, go back to the year 2000. What was the all-time high for Intel? Because it was a hell of a lot higher than this too.
Intel, I'm
guessing $85. That's my memory.
I didn't quite get to triple digits here. You were close, Dennis. It got to $75.83.
$75. So here we are 17 years later again, and we're still cut in half. So Still trying to play catch up to where the valuations were back in 2000 when everything was trading with a multiple of 90 or 100. So there you go. Prices caught up to where, or actually, profits are starting or have caught up to where valuation was. This is where it's settled down at 38 bucks, 37 and a half here now. So let's see what happens here. I think it's a breakout for Intel. I think some of these stocks that, everybody was paying 17 years ago the crazy multiples for aren't crazy anymore. So I don't mind these stocks down here because the multiples, there is some value here now when you look at these companies. I mean, Intel's a nice dividend now of 2.9%. Get some growth. If all of a sudden they start to, and there was rumors yesterday surfacing that, hey, Tesla might be working with Intel too. These were just rumors, that were on the street. But if they are all of a sudden, get, working with some of these growth companies again, look out for Intel because Intel's back.
And they also did that acquisition of Mobileye. Maybe that was tied to doing some more work with Tesla. You got to keep that because I think they're already using Mobileye technology in the Tesla vehicles. Just want to do a contrast of charts here. Like if you look at this daily, you're like, whoa, 34.5 to 37.5. Wow, what a move. Let's start looking to short this thing. But then when you look on the monthly here, going back, you're like, hey, maybe the party is just getting started in Intel.
Yeah.
You also had some highs. It was interesting. I was looking at this for an article the other day. After you came off the internet crisis, tech crisis, you came down hard. But a couple of the rebounds that you had in January and February of 2001 were right at just 38.50 levels. So hold on.
You got to go back 16 years to find resistance.
It does, but you draw a line across here. And, like I said, you could just could be the starting of something big here in Intel.
Let's go over to our other company that reported earnings from last night in the retail sector. Nike disappoints the street. Stock is trading down here in the pre-market. Full disclosure, I'm short Nike, shorted it on the pop. I stayed short. Thoughts here as NKE reported earnings. I'll limit my thoughts because I have a position.
Okay, did you see John Dotson's quote in the chat earlier today?
What was John saying?
Just sell it.
That's funny. I mean, okay, so it's the sales growth on the conference call that really hit the stock. But Spencer, give us the details here.
57 cents versus 48 cents. Sales of 9.1 versus 9.09 billion dollars. So fine Q1, nothing great. Q1 inventories up 6% year over year. They did come out and say on the call, like you said, Dennis, they see sales growth in the low single-digit range, and fiscal year guidance coming in the mid single-digit range, and everything on the call that they said wasn't super great. They did still have a good day yesterday because Adidas got hit really hard on some negative headlines with regards to an FBI investigation. So a good day for Nike in that sense, but not a great day when it came to their earnings.
The stock got up to 55.59 after hours, so it's completely reversed. It was up $2. Now it's down $2 here. That's the price action. I'm still short the stock. I'm planning on covering. It was an overnight trade. It was off an earnings trade, so it worked out for me, or it's working out for me. I've covered half the position. Probably going to cover the other half this morning here. But give me your thoughts, as technically speaking, where should I cover my short?
51.34. That was your pre-market low. That eclipses the former low of the move. That was at 52.09. So I think anything you're under 52 here, Dennis. I'd go 51.39 bid right there. That's a nickel above the pre-market low. So that's something to keep an eye on. If they really want to get this thing going, $50, I think there'd be a lot of people that are just bailing on this position. Like this is it. They've held on. Now this might be the final straw. 50.06. That was your December 16th low. And then back in November, you had a 49.01 low. So maybe this thing likes the even numbers. So under 51.34, maybe 51. Spencer, go over that news from yesterday. That was pretty big news for Adidas.
Yeah, so they got hit pretty hard. 2-year investigation by the FBI resulted in several arrests yesterday from several college basketball coaches with the accusation that they were using Adidas. They were essentially paying recruits through Adidas. Which if you follow the world of college athletics, and as it relates to shoe companies especially, different schools are associated with different brands. You have Nike schools, you have your Under Armour schools, you have your Adidas schools, and it's very, very competitive, and it's very, very murky, and there's a very dirty underbelly of that world, and this was a little bit of that underbelly coming to light yesterday, where we have schools just using the shoe companies as conduits for which to pay athletes, which is right or wrong, it's still against the rules. So that is what happened yesterday. Someone at Adidas was arrested, and we definitely have not heard the last of this. Put it that way.
I mean, that's big news, and you can't discount that. Adidas just hit a new all-time high of 118.98. So I don't know. I mean, is everyone switching from Adidas to Nike? But the news is out here. You've sold off $10, 110, 20 is where we went off the board. But I don't know. We'll see how this goes moving forward. But not good news for Adidas. And Dennis, you also mentioned something about Nike, where it had come off its all-time high and everything, but still, if you look at some of these other retailers and like Under Armour and stuff, maybe this thing's got a lot more work to do. Maybe you should never cover that short.
It's held on a lot better than a lot of the other. We've already said that. We said on the show the last couple of months that Nike has held up better than a lot of the other retailers. And if they ever decide to start hitting it, the one benefit that Nike has, though, is obviously, they can sell their shoes online. They're mainly your manufacturer. I know there's some Nike stores, but typically, they're taking and they're selling, in other stores. They're selling in the Foot Locker and the Finish Lines and all those other stores, where, if they took their business to Amazon, well, they're still going to be selling shoes. So that's maybe why they've held up a little bit better than some of your traditional retailers that are just, shoe stores, or just talking, selling, in the physical stores, because Nike can do both. And Nike hasn't been selling on Amazon, but, obviously they said last report, I believe it was, that, that's in the works.
5206 was the former low of the move here. So if you're thinking about potential resistance level, they may try and find some sellers. Not too far away from it, though, trading 51.93.
Let's take this over to Twitter, TWTR. It's getting a lift here in the pre-market. 280 characters. Okay, so that's the big news here that they come out with last night, that we are going from 140. We're going to let some select users use 280, and maybe they're going to go to everybody with 280 characters. This has got the stock up 2% here this morning. Full disclosure, I've shorted the stock because I don't think there's any reason this should be up 2% on this news. My own personal opinion, but I don't think this is a groundbreaking innovation. I honestly think I don't really like it personally, because I think it's going to water down the content a little bit more. People, are very concise with what they write on Twitter because they have to be. When I tweet something out, I'm looking at it, and sometimes I got, 170 words I'm trying to squeeze into 140. So, I got to be very, very concise about it. It's nice, it's like, boom, you get the person's thought, nice 140 characters. Now they're going to be able to do 280. I mean, I don't like it at all, to be honest.
I have to agree, and boy, I'd like to talk to Sean Udall and see what he thinks about this. The reason I don't like it is because what we've been talking about on the show, what the Wall Street analysts, what everyone's talking about is monetizing the traffic that they have, right?
And this is what they do. Yeah.
And now this so far between Ace, who's calling it tweet litter, I think that's what it says. No one thinks it's a good idea here. So I don't know, man. I'm glad I wouldn't go.
I wouldn't go that far. I would say some people probably think it's a good idea. I don't think it's a good idea for a little bit different reason than you guys. I just think so I'm finding more and more there's a lot of negativity about Twitter as a product on Twitter itself. People will like to, take dumps all over Twitter as they're using Twitter, not the stock too, but also the product. And I don't think the solution to making Twitter like a nicer place it's more Twitter, right? Which is essentially what it would be, is more Twitter, doubling the size of the character counts. And I think people use Twitter because it's a great networking tool, and it's where people happen to be congregating online. But I think a lot of people, from what I've seen, acknowledge that Twitter is like a cesspool. There's just a ton of garbage on it, just a cesspool of misinformation and garbage. And people acknowledge like that side of Twitter, and I don't think that the solution is more of that. This is essentially what they're doing. So I don't know, but there are people out there for sure that think this is a good idea. Just to be clear, I'm sure there are people out there that think, yes, this is a good idea. Obviously, the stock's up $2 today.
Yeah.
Not
So
$2.
2%. 2%.
Yeah.
I'm sorry. Stand corrected. I haven't looked at a chart yet.
$2.
I was going to make that exact point. I mean, right now it looks like there's people are plotting this because it's up 2%. I am not one of those people. I'm short the stock. So because I don't think this is a groundbreaking innovation. This is what they're doing there. They're putting their heads together, and they're, here we are. We want, to figure out how to monetize this, but how to figure it out. This is their big groundbreaking innovation that they're going to extend the tweet length. Like, come on! I need better ideas than this coming out of Twitter. That's why I'm short the stock, and I'm sticking with it.
And what turns me off is essentially they're continuing to make it more and more like Facebook. Facebook cannibalized a couple of news features from Twitter, including the news feed, but Twitter has also cannibalized a number of features from Facebook. And part of what made Twitter unique is the character limit. That's what makes Twitter Twitter. Quite frankly, that's what makes it Twitter. And when you make it longer, it sort of dilutes that a little bit. So
Two things.
I don't know.
How are they going to decide who gets to use 240 characters? Number one.
Is Trump getting it?
Oh, no. I hope
280.
I hope so.
And second of all, I've been holding a small portion of this in one of my long-term portfolios. This might be the last straw. I don't know. This is just very disappointing. Not the way I wanted to go. I've been holding out on this, a very small position. This just might be like...
We need to talk to Sean.
Sean?
That's what we need.
Yeah?
I'm bearish. You're turning bearish. We need to talk to Sean. He's the eternal Twitter bull there. See what Sean's saying. Maybe he'll pick up our spirits. Can we get him this morning? Or he's out in California, though. It's
no, he's in Arizona. Spencer, can you do a little digging? Maybe see if...
Dig for Sean if we could get him by the end of the show, just for 5 minutes on Twitter, because he's the one that follows this company very closely from a fundamental perspective. He makes pretty good calls on it. He's made some money on trading it too, but he's been bullish a long time. So let's see if he's still a believer after they've extended 280. Personally, I don't like it either, Joel.
Yeah, okay. All right. That was our 5-minute Twitter talk. What else do we got moving?
That's all right. We like 5-minute Twitter talk. We got the extended tweets here up to 280 characters. So instead of talking 2.5 minutes on Twitter, we talk 5 minutes on Twitter now.
There we go. Everything is
annihilated here today, guys. Nobody's going to be talking about this right now, but this is what the story is going to be here this morning. TLT is down 1% here. I'm not sure what the catalyst is, but when I see TLT down, I automatically say, oh man, the banks are going to be flying. And if you look at them, they absolutely are. JP Morgan trading up $1.10 here this morning. It's the biggest move for JP Morgan in a while. Bank of America trading up 1.5%. Citigroup up 1.1%. Goldman Sachs. That one's for Ace. I haven't done that for a while. Up 1.07%. Wells Fargo up 1% here this morning. Banks are hot right now here, Joel. Give us some technicals on the banks because these banks are approaching their 52-week highs.
Just real quick, did Auntie Jeanette say anything about?
She had to have.
Yeah, she did. Didn't she say something yesterday?
She was speaking in Cleveland yesterday, but that was at 2 o'clock.
Why is the TLT down so much then? And chat, you can help us out with those too. We haven't done enough digging here. TLT getting killed, and if you're not just talking banks, and I think about the XLU too, utility stocks, it's always bad for us. So XLU is trading down here in the pre-market. They probably get hit as well, but let's jump into those banks.
Okay, I'm gonna try and give you one key level in each of these.
Let's do it.
Wells Fargo, triple top 54.30, trading above it. Hold that. More room up to the 55 number. Goldman Sachs, I've been toying with this one for a long time. I've tried to say, okay, it's finally breaking out. It's finally breaking out here above 230. Let's see what the pre-market action is indicating here. You got one stray print here, and I don't think that's much volume at 230.240. So my one number to keep Dennis happy is 233. 235.83 is the high of the move, but that's too far. That's too far.
You never know. It's up $3 today.
Is it?
If they hit the gas pedal. Yeah, Goldman's already up $3, halfway there.
You know what?
We're halfway there.
Okay. Let me see if I can maybe didn't find a place to buy it. 230. I'm getting my bid out there at 230. Not only today, over the last couple of days, if it comes back there, because the close from yesterday was 29.94. JP Morgan, last print, or I did Citigroup, last print at 71.79. And that might be a new high for the move here. 72.20, folks.
No, what stock? You got me confused. You said JP Morgan, then you started talking the 70s.
Citigroup.
Oh, Citigroup. Okay.
72.20. That's your number on the upside. And then the last one I'll do two more. I'll do JP Morgan.
Okay.
Dennis, I know I taught you how to buy it at 28.
Yeah, I know.
Let's see here.
Never forgiven.
94.80. That's your last print. And not too all-time high, 95.37. And then the old stodgy stock, Bank of America. Boom. This had a high of the high of the move. The recent high of the move has been, we hit 25.80 in February. I don't think we're going to be close to that today. No, 25.16, but holding on here. So banks are looking good. Maybe they can help the Dow end his 3-day losing streak.
Wave Trader is saying it's the president's tax plan that was briefly talked about or briefly shown last night. I did see that go by my thing, and that's what he's saying is it's about talking pumping yields and killing bonds. So maybe I haven't read the details of that, but that's what Wave Trader is saying. One of our catalysts here are this morning.
Thank you, Wave Trader.
Let's go and look at.
What about Intel? Do we hit on that one? Did I miss that one?
We can bring it back to the we talked Intel.
Okay, sorry.
We talked so much the pre-market show. And it's in breakout mode. I like it here. We did talk Intel. Let's jump over back into ratings land here because there's some interesting ones this morning. Michael Kors and the retail stocks we've been talking about, and they've been hot. Like, have you seen that L Brands? L Brands has been blasting off into orbit the last few days. Well, Michael Kors has been blasting off into orbit too. KORS, just quietly, has come back, and July has hit almost $32 a share. It's 47. That's a 50% move here in 2 months. It's been a nice move. I'm going to call an analyst chasing price here this morning. You're getting an upgrade from Canaccord. Price target up to $58 here. Chart looks okay. It's got the rounding. I think there's room to 50 on this one, KORS, but I feel like you're chasing it now. I feel like the time to buy retail was when everybody hated it 2 months ago in the summer, and now they're all getting on the bandwagon. Now they're all chasing it. I think Michael Kors gets up to 50. I'm out. Like, I'm not in it, but I think, if I was in it, I'd be wanting to get out.
You have some interesting levels to keep an eye on. Trading at 48.19. That's the high of the pre-market session. Not sure it's going to get to 50 today because it's going to have to plow through 48.95. That was your high on December 14. So there's a nice level. Just holding up here at the highs of the pre-market session. So maybe this one's not ready to give much of it back yet.
WBA Walgreens catches the downgrade at Raymond James. I've had the little bearish rant there last week on Walgreens and CVS saying I think these two stocks will get Amazoned eventually here. They've actually come down since I was talking about them, although CVS had a pretty good rally the last 3 days. What are your thoughts here, WBA Technicals, Raymond James with downgrade?
Let's see what happens at the pair of lows at 70. We're not quite there yet. Another 80 cents lower. You have a pair of lows at 77.62 and 77.70. You might get a chance to short this thing flat on the day at 79.08. But the recent low of the moves in the 77 handle. And let's see if it's affecting its brethren here in CVS. I know major resistance at CVS at 84. You can see those tops there. Coming on the downside, if they're going to hit CVS with this, that nice 3-day rally that started from 78.62.
One thing I will say is typically when you have a downgrade, it's just one stock. It typically doesn't have a sympathy move. Sympathy moves come in because, company reported bad. So if they have bad earnings, then, you got to think, well, maybe the other ones didn't do that great either. That's when your typical sympathy comes in. When you just get an analyst commentary, sometimes you don't get that unless the move's just, a call on the sector, or unless the move is just very significant. I mean, if Walgreens is down 5% or 7%, then I would say, yes, you're going to get a CVS down move with it. So that's one thing to consider when you're talking sympathy moves here. I want to go to imbalances. They are hot off the press here right now, and we are seeing some big ones here on some individual stocks. Alibaba, it's hot again here. 125,000 to buy in BABA. It actually had a day. It popped yesterday a little bit there, but then leaked. Well, this morning it's up $2. We're getting positive commentary from Wells Fargo, I believe. Wasn't on Alibaba. Did Wells say anything on Alibaba? I thought they did. Maybe it's just Baidu. So Wells came out with a note.
Yesterday, you're saying?
note today, this morning, Wells Fargo note. They came up bullish on JD.com,
Yeah.
Baidu.
Yes,
Did they say anything about Baba?
Yes, they did. They are reinstating their outperform on Baba.
Reinstating, okay, outperform.
And their $225 price target.
Okay, so all three of these Chinese stocks, Baidu, Baba, JD.com, all trading up on the Wells Fargo note here this morning. Wells Fargo and Alibaba is trading up at 169, 125,000 shares to buy in that one. Joel, quick technicals again, and I'll give you some other imbalances.
Baba, maybe if you want to use a target, if you're going with the long here, let's just look at the high from yesterday. Since we did sell off pretty good on that level, target on the upside would be 170, 190. That's still a couple bucks away. That was yesterday's high. Your 2-day high is way up at 177.
Jumping over here to other imbalances. Nike, 81,000 to sell. We know that's because of the disappointing earnings report here. AT&T, 38,000 to sell. AT&T still had a pretty good day until yesterday. I'll tell you, I'm concerned here on AT&T this morning, mainly because it trades like a dividend, it trades like a bond, and obviously it is not trading, or obviously the TLT is getting filled here in the pre-market.
Wow.
It's not down at all. No, it's not down. That's an odd lot. That was just a FINRA off exchange trade. Okay. It's actually trading up 3 cents. But that being said, so it's got a shot here today. I think if when you're looking at utilities and you're looking at different stocks like this, I think AT&T is one that can get hit on this news. Hit on the TLT?
Did you get the Verizon at 50, Dennis? We had that little debate the other day, and you were talking about 50
it cut through it. Yeah, no, I said, there's a level that I might be shorting up there. I did not, but I'm looking at it now. Now I love that level. So it went through it. Had the fake out breakout, 50.31, didn't go up. Now it's, a test up to 50 yesterday, 50.08. I'm going to call that major resistance here now because it looks like it failed there. And here we are, we're trading down. I don't think it's good news here for either of these stocks. The TLT is crushed today. I think T and Verizon could take a hit.
You know what? I'm going to wait because I've done okay with Verizon and AT&T on some option puts and stuff, but I don't want to sell it the whole. I want to see if it can get anywhere near 50, get back 49.80, 49.90, something like that, because after poking your head over 50 3 times and then having a breakdown sounding like at 49.51, also a double close at 49.90, I think the institutions are just going to be reloading at that level. So,
I just don't think they're going to get a shot.
You don't think so?
With TLT down that much, I think it goes under $49 today. That's my opinion.
Yeah. So what's the bid out there? Is there a bid?
49.35. I'm not hitting that though because I think you get a better shot at the open.
I do too.
Because people don't just think. They don't just come in and people aren't thinking that quickly. I say I will tell you if you look at the correlations, T and Verizon are more correlated to the TLT than they are to the SPY. One consideration is that correlation is kind of broken down just as of late. These stocks have been taking off, a little bit more to do with, the T-Mobile, Sprint stuff, that kind of catapulted them. There was an upgrade on one of them in there, I believe. So, they've had a pretty good run. I think this is a good, another reason to take profits. So if TLT is going to start to get the hits, or if we're starting to worry about interest rates going up again, that is the long-term driver of those two stocks with those high dividends. And I think AT&T and Verizon are due to maybe make a turn again, turn to the downside. Getting bearish, those two stocks. I own AT&T in my long-term investment portfolio, not getting out of it because I've had it in there for like 15 years. I like getting paid. I don't own Verizon, but if I was, looking at it from a trading perspective, I think these two stocks might move down.
All right, real quick comments, technical comments here on X before I make any. I'd like to see, but not doing much in the pre-market. Let's see here. I mean, 2 higher lows found support under 24, just like it did in August. So I kind of like that. Maybe go back up. Got a couple gaps to fill. But I like the support. I think I would be out if it took out that 3-day low. And then I'll hit CTAS. What's that? Cintas Corp. Let me reserve comment until we had a spike up to 143. I don't know if we had news or earnings on it. But 139.74, that's your all-time high. That's $3 away from the close. Was there any news on Cintas?
Wait, CNTS or CTNS?
CTAS. Yeah, it had earnings.
Sorry.
sorry.
Yeah,
It had earnings.
Okay.
it did have earnings. Yep. And they beat on the EPS and they beat on the sales, and their guidance was pretty good too. So that's why CTAS is up. All right, 8:35 now. Time for our first break of the day. We're going to grab Paul Yook, co-founder of LifeSci Index Partners and the PM of the BioShares ETFs, tickers BBC and BBP. We'll be right back with Paul. On Zoom? Okay, good. Joel, real quick. I forgot to turn off your notifications, your IM for Skype. On Skype, can you go to call, the call on the top menu? Like the turn what off? Wait. No, don't turn anything off. Just go to call, and we'll do this real quick. It's audio settings, right? Isn't that a thing? Okay. And then click on notifications. I'm sorry. I changed my mind. Sounds. Click on sounds. And then scroll down. You want to scroll down on that menu and uncheck incoming IM. There's 2 incoming IMs. Just uncheck them. And then click. Uncheck them both. And then click save. Okay, we're done. Because that way, every time we IM'd you, I heard it when the show started. I heard my little loop. So. Hey,
Hello?
Paul. Hey, Paul, how's it going?
Hey.
Yeah, Spencer, Joel, and Dennis here.
Okay, hold on one sec for me.
Sure. Whoa. We're still on. Are we still on?
Hey, Spencer.
Hey, Paul, how's it going?
Good. So you have Jonathan Wexler and Paul Yook here. I don't know if you saw my email.
I did not, but that's okay. Can we roll live right now?
Do it.
All right, let's do it. Joel, go for it.
Doing really well, Joel. Thanks for having me. I also want to introduce my colleague, Jonathan Wexler, who is our head of retail distribution and a real biotech stock maven here at LifeSci. Thank you, Paul. Joel, pleasure to be here with you as well. Thank you so much for your time.
All right. Well, we got 2 good guests here. Paul Yook from Life Science Indexes, as well as his partner, John. Paul, let's start with you here. Nice move. Let's just go to the IBB here in a kind of a breakout mode. It took a while to do it. Just give us some general comments here on the IBB.
Yeah, absolutely. The IBB, as you know, has having a rock star of a year. The fund really had a really challenging second half of 2015 and a really rocky 2016. So I think we're just some of it. The first move was recovery mode, and just coming back from some of the fear. But really, what's interesting is the last 2 weeks, for the first time all year, we had significant inflows into the IBB and the other biotech exchange traded funds. We had about $400 million of inflows into the sector. Some of it was at the expense of other sector rotation. I think retail suffered some pretty dramatic outflows. Maybe some of that are people are continuing to be concerned that Amazon is crushing all the other retail subsegments, including the food space. But so there is a lot of excitement about biotech, and what's interesting is the first kind of 20 to 40%, people really just missed and sat on the sidelines. We continued to see outflows all of last year. This year we had people just trickling in, certainly no major stampedes in. So really just the last couple of weeks, we're finally seeing money come back into the space.
All right, so let's move on here to what's going on in Washington a little bit. Things with the healthcare plan, positives, negatives on it. It seems like they're really going nowhere with it. How's that going to affect it?
Yeah, it's more really of the same. I mean, what's really happened with trying to replace the ACA has had a very muted effect on biotech. If you follow the tape, it's really affected more the hospital stocks and the HMOs, and those are also companies. If you look at stocks like Anthem and HCA that are having stellar multi-year runs, and so we've really seen them get hit over the last couple of weeks as the repeal has fallen on lower probability. These companies are trading at all-time high levels as well as very high multiples. So I think that there are some challenges and risks ahead with owning these stocks in the near term, but the long-term demographics are great. So I think with respect to the pharma and the biotech industry, the current status quo is a good place for being a drug executive because you have continuing drivers of demographics, you have continuing solid pricing. You don't have the fears of the industry pricing getting slashed. So I think that people in our industry are breathing a sigh of relief.
Let's jump over into some individual names here and talk. Let's talk the big biotechs first before we get into some of the smaller ones there. One that everybody follows is Biogen, BIIB. It's a big component in the IBB itself as well. And I mean, he is looking at a technical basis as things, started to show some life a month and a half ago when a lot of the other biotechs took off, had the big run. It's kind of paused here for a period of consolidation. What are your thoughts here going forward on a stock like Biogen?
Yeah, Biogen is super interesting. They're still largely driven by some very old drugs, and these are these injectable drugs for multiple sclerosis, a chronic therapy. Now, I think that the big part of the hit, as you're talking about, when that stock traded down from 400 down to really 200, was people were saying, "My gosh, these guys have been getting all of their revenue growth from pricing increases." Let me give you a couple stats. 20 years ago. Their top-selling multiple sclerosis drug, Avonex, was selling for about $10,000 a year, and that same drug today is about $70,000 a year. Now, nothing's changed. It's just this is drug price inflation, and this has really hit the radar screen. It's more difficult to be raising prices 7 to 10% a year as they've been doing, so they've had to throttle that back. In addition, they had some failures in a couple of their pipeline drugs. But what's really happened since then is they had a very successful spin-off of one of their businesses, their hemophilia business, and it's back to regular traditional business. They don't have any ultra high risk programs in their pipeline anymore. They had a very positive success in a very high tech drug for a debilitating genetic disease called SMA. So we've got some real growth drivers. So we actually, for the first time in a while, I think Biogen is a pretty good growth stock to own for the medium term.
What about some of these other ones? Let's go to Allergan because AGN has been crushed here the last week and a half. It was actually starting to show some life just in early September there, and then some bad news came out, and they've really hit the stock down to $200. I mean, this was a company that Pfizer was going to buy out for over $300. Now it's $200. You see any value there in AGN?
So Allergan is a great example of a company that we define as a specialty pharmaceutical company, meaning that they don't naturally come up with their new products or therapies or cures or innovations. They're driven primarily by acquisitions, and they've made several over the last couple of years that have either proven to be fruitful or not. The thing about the company is that their sales are going to be probably not growing as much if they don't continue to make acquisitions, and in this climate, it's going to be difficult to do so. The other thing about them is that they place a large premium on increasing pricing of their drugs and therapies, and over the coming years, that's probably not going to be able to grow as fast as it used to.
What about smaller?
They've really shrunk their dependence on some of the cosmetic brands, but if you look at their P&L, it is still largely driven by the Botox, Restasis, their dermal filler business, and you're talking 30-40% of total top line revenue, which is a great space. It's very resilient, but it doesn't have the same growth growth profile of some of the life-saving drugs that we see launching.
A couple of the companies, that obviously bought by, growth and obviously accumulate too much debt doing it, like Teva Pharmaceuticals and Mylan Labs, both of those, well, Teva more than any of them, and VRX, we know the story with that one. What are your thoughts here on Teva, though? Now it's been absolutely annihilated. I know, everybody's talking about the debt there. What's your guys' thoughts here on TEVA at $17?
Yeah, listen, debt is a really hard spiral to get out of. There's been a ton of headwinds across the entire generic sector. There isn't one company in the space that is doing well, and so we don't have a lot of these big blockbusters of drugs that are coming off patent in the next 3 to 5 years. What really benefits these folks is when you have a whole period of, say, cholesterol drugs or big neurological drugs that are coming off patent. We had that period over the last 5 years, and now there's a little bit of a dearth. And so you just don't have these big brands coming off, which technically are huge cash windfalls for these companies. That combined with the huge debt loads they have is going to be a real problem. You're talking about Teva, $35 billion of debt, right? I mean, they're trading at 7 times debt to EBITDA. It's just not 5 to 7 times. It's just not sustainable when they're hiccuping in their core business.
Out of the chat, Gilead Sciences here. The street wanted them to find some growth, and they did, and got a nice rally here. A little bit too much, too fast for Dennis here. Did get up to 86.27 here. Had all kinds of opportunities to buy this under 80, under 70. Are investors going to get another shot to buy it at those discounted levels?
Well, that's a great question, and investors have been waiting for Gilead to make an acquisition over the last few years. There's been a real pressure on the company to do so. Gilead's been known to take a lot of time in deciding what they're going to acquire. They've made the best acquisitions in biotech over the last 10 years, and they didn't want to change that track record. They made an acquisition of Kite Pharma, which was the largest acquisition of a pre-commercial company in history in biotech, meaning a company that does not have an approved drug. But the thing about that acquisition is that it really changed their platform. Right now, they were known for HIV and for hepatitis C, which are 2 viral infections, right?
By the way, the prior largest pre-commercial biotech acquisition was also made by Gilead, PharmaTech, for $10 billion. Gilead was acquired for $12 billion. They have a pretty good track record. They're 1 for 1 so far. We'll see how this one goes.
Yeah, we will. But the thing about Gilead is now that they're expanding into oncology and specifically into a cure for a lot of different types of cancer, this is going to be something that's going to drive their value going forward. They're going to be able to compete with some of the larger pharma companies now and really transition their business into one that's more holistic. So we're very constructive on the company.
Are you going to get another shot, bottom line? I don't know if you're going to, are we going to see these $60, $70 levels that we saw? I don't think so. And the reason is, the street is revaluing them. It was always trading at an ungodly low PE multiple. It was trading at 7 times PE simply because people said, what the heck are these guys doing? They're not acquiring. Their revenue is shrinking every quarter. And now they've made an acquisition that people are excited about. This could be a cure, as John said, for major cancers. You look at the PE, it's still trading at 9.5 times. I just don't see that getting much lower with this potential huge growth engine in the future.
Yeah, they took their time with the acquisition, and the street thinks they got it right. Johan Smith is asking about 2 more stocks, and then I got a really tough question for you guys before I let you go. Johan Smith wants to know about Amgen.
Yeah, okay, so Johan, I guess, I don't know what specifically your question is, but, Amgen, the largest biotech company today by size, it is a real juggernaut. Their pipeline is immense. They have just a huge number of shots on goal. The truth is today their product line is fairly diversified. They don't have the same issues that Gilead had with, essentially one product in Hep C, leading to their stock demise for a couple of years. They're pretty spread across, these basically what we call these white blood cell replenishing and red blood cell replenishing, as well as cancer, and they're in osteoporosis. They're in a lot of really interesting areas. So we like the company a lot. It's a very diversified drug company, essentially. It is larger than many major pharma companies, yet they have a huge amount of very cutting-edge biotech therapies in their pipeline. It's really kind of an ETF of the biotech industry, I think. We like it a lot.
And I know you touched on Teva and you mentioned Valiant too, but is this stock ever going to get out of the doghouse? It seems like it has some rallies. 263.81, the all-time high. Any comments here on Valiant?
Oh gosh, 263. It's never going to get there. I mean, look, I think that their darkest days may very well be behind them. I'm not sure they're in the clear at all. They still have a crazy amount of debt, something like $30 billion of debt. They're trying to pay it down, $1 billion at a time. But $1 billion at a time takes a long time to knock off $30 billion when their cash flow is in the low single-digit billions.
All right.
So,
okay,
they do have some great products. Yeah, I think it's kind of dead money.
Okay. So how do you guys, and I don't know if you do always avoid, but these stocks like, Axovant Sciences Limited, these stocks that just lose 70, 80% of their value on one day. I mean, I know you might have them in your indexes. I mean, how do you guys avoid, getting caught in stocks like that? And if you have, how do you handle it?
So the way that we avoid it is by diversifying our portfolio into many of the clinical trial stocks in the space, right? So we've had a couple of blowups this year, like Axovant, like Versartis, which was down 90% last week in a day. But we've also had large increases in stock prices, like Myocardia, for example, and Kite when they got acquired. That was part of our portfolio as well, and it went from, call it 90 to 180. So the real way to mitigate risk in biotech is to balance out a portfolio. If you try to pick an individual stock, sure, you might be able to hit a home run, but you have the same propensity to get blown up. There are a lot of different companies that have potential, and the way that we do that is by investing in our BBC ETF, which we created the index for, which has 75 companies in it now. And by owning 75 companies equally weighted, if you have more winners than losers, you'll make money, and it's up about 51% for the year so far.
All right, we've been on the line with Paul Yook and Jonathan Wexler from LifeSci Index Partners. Guys, thanks so much for hopping on today.
Thank you very much for having us. Talk to you soon.
All right, 853 S&Ps hanging above 2,500 here. 0.125. I just want to give you some just some daily levels here, Dennis, and you could comment it if you want. Friday, Monday, and Tuesday's highs were 2,500 to 2,501.25. So there's a triple top. And then you have the all-time closing high at 2,404.75, and then 4 consecutive highs up at the 2,507. Dennis, if we just hit a wall of resistance, and like the big boys are like, we're just not going through here. We're just going to keep on selling and keep on selling until this market goes down.
Well, I can look at the SPY 250 again. I don't have the quotes or the charts for the AA minis, and I always want to give that little rant because I don't like to pay $600 a month. But the SPY I'm looking at, you must be talking the 250 equivalent. Yep. And yes, there's a wall of resistance up there. And there's a lot of things to worry about. We've talked about that. But, we know that the S&Ps continue to climb the wall of worry. But really when we consider it, and we've talked about, how, this S&P is so resilient. But, it's been a slow, steady climb. It hasn't been like a crazy, buy everything climb. We haven't hit like an upside capitulation or anything like that where everybody says, I have to be in this S&P, put me in there right now, I'm getting in. That's typically when tops happen. And we haven't seen anything like that. We just see slow, steady, stodgy old climb here on the S&Ps. And, even, you can say, okay, yeah, we know we hit new all-time highs. We're barely hitting them. So, the S&Ps are just quiet. It's just quiet. Every time we pull back, there's another sector leading the way. We know rotation has really led this rally. It hasn't really been, it's been, it was tech for a while. Now it appears like it's going to be financials because financials are driving it here today. We're up near, the 52-week highs on a lot of the banks. There's always a sector picking up the slack. So it's hard to get bearish it. But really, for the bull case, it hasn't been, the crazy strong rally that some people may make you want to think it's been. We've went up. But we've seen a lot stronger bull markets before as well.
One comment that Nick made, I don't know if it was on the show or in one of his notes, is that there's this constant rotation here. So I don't know when we've had a last day where it's been sell everything, right?
No, you don't see that. You don't. They're just going from one sector to another sector. Like today, they're going to be going into your banks hard, and it appears like they might be coming out of some of your defensive stocks like your REITs and utilities because interest rates. Gold is getting annihilated here today, so that's another thing that typically moves around more when when the TLT gets hit, gold seems to get hit as well. So that's where it's going here today. Some of your tech stocks are showing a little bit of strength, but they kind of they're still the jury's still out here on tech right now. Because like we said, a lot of them are clinging to support. It was a good day yesterday. Amazon held, Apple held. We had NVIDIA held as well. But the jury's still out because those things aren't that far off their support yet. So we're looking at them. But on these banks, that's going to be the money at least this morning here. Like they moved up further even since we were just talking. The Bank of America is trading up here, up 42 cents now. It's up almost 2%. So 1.7%. Like these stocks are catching a hard bid here off their weakness in the TLT.
All right. Any change in imbalance here 4 minutes before the open?
Square 261,000 to buy SQ. It is starting to follow a wall of resistance in the 28s. So this is getting back up in the 28s again because of a big buy imbalance. It got up to 28.48 yesterday and then collapsed. So I'm going to say I'm going with that theme here. SQ, if it gets up there in that 28.5 area again, I think you're going to find resistance on that one. So SQ has a wall of resistance up there in the 28s. Hard to get bullish a stock until it can get above 29. So that's one to consider. Alibaba's 166,000 to buy, still trading up significantly. Bank of America 174,000 to buy. The financials are hot. HPQ, haven't talked about that one for a while. 129,000 to sell. Not sure if that's just a one-off or something's happening there, but HPQ has a big sell imbalance here this morning, although that's a big, thick stock. 129,000 shares usually only drive that down 10 cents. General Motors, which has been hot as hell, has 39,000 shares to sell this morning. Just careful. Little potential for a double top. 40.64, 40.62 from the last 2 days. So you just want to be careful here. It's been a long time since General Motors has been up over 40.
What do you think, Dennis? We've talked about adding this to our portfolio. I know you have the Ford. I talk forever. Should I just bite the bullet here over 40? Doesn't it just the way GM is traded for all?
Doesn't always give you another chance.
Doesn't it seem like you could pick this up at like 38 and change or something?
I don't see if there's any stock that I don't want to chase. It's a stock like General Motors because every time it seems to get up in the higher 30s, you look at it a few months later, it's back in the lower 30s. So you can go out to the monthly to see if there's some proof to this, and there's all kinds. But 2013 we got up over $40, we pulled back to 30. 2014 we got up to 37.38, we pulled back to 30. Then we got up, in 2015 we got up to 37 again, we pulled back to 25. That was a big downfall. I don't know what that one was. Maybe it was a flash crash or something. Then we go. The mini flash crash. Then we go 30, we got up to 35, $36, 2015, back down to under 30. So, we've came so many times up here and so many times failed up here. We are as high as we've been. 41.85, I believe, is the all-time high. And that's the all-time high since the reorg that they had, obviously, because we know General Motors went bankrupt, reorg, debt, get the debt down. And, so this is almost as high as we've been. So I just think it's not a stock I want to chase, though, because so many times it gives it back.
Any imbalance in Chicago Bridge and Iron, CBI, wave trade?
I'll go take a look.
Yeah, that's
5,100 to buy. Small. Man, that stock's been on the comeback trail. Look at that trend. Trend is your friend there, Joel. You could just draw the perfect purple crayon. That's a shout out to Jeff Mackey.
Oh my lord!
The perfect purple crayon there from those August lows under $10, straight up. Almost, and it's filled the gap, and it's getting up there. Now I feel like you're late to the party, though.
Wow, this one, it did fill the gap here at 16. Wow, I'm not going to count the days here to bore you, but a lot of consecutive up days. All right, Dennis, we're going to let you slide here. Spencer, we got another interview coming up, right?
On Rod Casilli. He is an options trader. He is also the head of product management at Collective 2, which is a firm out in San Francisco. Rod will be at the Benzinga FinTech Summit tomorrow in San Francisco. I'll be there as well. Rod will be there with me. Rod.
Good morning.
Hey, Rod. How's it going?
It's going well. How you doing?
Great, doing well. Thanks for getting. I know it's early for you, so thanks for getting up with us this morning. I was just mentioning how you're going to be at the Benzinga FinTech Summit tomorrow. You're as a member of Collective 2. You're also an options guy. So give us a sense right now, Rod, for what you're seeing in the market, and then we'll talk about the event after that.
Absolutely. Well, another day, another set of highs, right? Putting the pressure to the shorts. On our platform, we're seeing a lot of people trading the momentum stocks and technology. So everyone's on NVIDIA. A lot of people playing Tesla. We continue to see people trying to bottom fish around volatility, which has been challenging for this year and probably for the last 6 or 7 years. So essentially, just going where the action is. That's typically what you'll see on our platform.
Rod, what do you think it is about NVIDIA and AMD specifically? Those two stocks are frequently among the highest trafficked articles on Benzinga.com. There's so much interest in NVIDIA and AMD and trading wise too. So why do you think that is?
Well, it's interesting you mentioned those two. Of course, they're both in the semiconductor space, but they couldn't be more different, right? For a long time, AMD was on the verge of going bankrupt, right? It was the dog. It was sub $5 for so long that a lot of institutions couldn't trade it. I think now it's become a story stock. It has a halo effect along with NVIDIA, which I'll get to in just a moment. And it's cheap from a dollar perspective. So anytime you have stocks that are moving around, that have stories around them that are sub 15 but over $5, you're going to see quite a bit of action in them, and you can kind of ride the wave of that. NVIDIA a little bit different. Of course, it's it's the name of Jim Cramer's dog, right? And he jokes about that. It'd be funny if he really does have a dog named NVIDIA. And also, again, it's a story stock like Tesla and others, so it can really move quickly, move on its own. It tends to behave well in terms of technicals. So, it has really respected key technical levels and moving averages, as has Tesla probably for the last 2 or 3 years. So I think for both those reasons is why you're seeing just a tremendous amount of activity on our platform and then generally in the marketplace.
All right. Tell us a little bit about Collective 2. You've been on the show a few times now, but you'll be at the event tomorrow. Tell us a little bit about what the product is.
Yeah, so Collective 2 is a marketplace that connects independent traders with investors. So we do it by saying, hey, if you're a trader, we call them trade leaders, and you have a strategy, you can publish that to Collective 2 by connecting your own brokerage account to our platform. We'll track your trades, build a track record for you that's public, walk forward, out of sample, all live trades. And then investors can come in and subscribe to that trading strategy and have those trades auto-traded in their own brokerage account. So we call it peer-to-peer trade sharing, and that's what Collective 2 is all about.
And you guys are also giving a demo tomorrow. What exactly will you be demoing?
So we're going to, 4 minutes is a little challenging, so we'll see what we can get through. We'll try to...
I feel you on that, man. I feel you on that.
Well, I mean, look, it's bite size. It's like super quick TED talk, right? So I'll be actually giving it. If anyone's in the San Francisco area, I think there's still availability to show up. We'll be giving away stress balls with our C2 logo on them and a nice discount to the Collective 2 platform. But essentially, I'll just talk a little bit more about the business model that I just mentioned, and then we'll show a demonstration. We'll mostly focused on the investor experience, how someone could come in, research strategies, understand their risk-reward profiles. It's important to point out that everything on Collective 2, for a variety of reasons, is hypothetical. You have to understand hypothetical track records. But yeah, it'll be just a quick overview of Collective 2 with my mug in front of it.
Sounds great. I will be there myself. I will be watching it. And what else can you tell us about what Collective 2 is trying to do with regards to just promoting communication among traders?
It's. I think we have a higher purpose. Cue the music. Beyond just the trader communities, which there are quite a bit of trading communities, we're really trying to solve the alpha problem, right? I mean, you speak to traders all day long. Trading is very difficult. It can be very solitary. It's extremely competitive. You have to be very humble. But if you hone your skills, you can, with small amounts of capital over longer periods of time, consistently outperform certainly indexing and things. So it just seems like the entire world has moved towards giving up on alpha production, accepting that all we can do is try to run expense ratios down to zero. And that, what's the value of a financial advisor if they don't produce any returns more so than just investing in the market? Well, they're squeezed too. And now you see this robo-advisor phenomenon where especially younger people are just pretty much convinced that, the way to invest is just be in the market, be indexed to the market, and that's it. So we're really trying to show that alpha still exists. It's in small pockets. It can be very distributed. It's not necessarily something that can be done with massive amounts of money. But if you're a small independent trader or you're a retail investor, there is alternatives to you out there than just accepting that you have to index or that you have to listen to an advisor that's just going to throw you in a mutual fund.
I'm seeing a shift sort of I guess in the past year or so away from the love of robo-advisors, and people are kind of like, well, it's not really all that different than just having a financial advisor. It's the same thing, really. And I'm seeing a shift. People want to have a little bit more control. They don't want to just throw their money into a robo-advisor and track the market for 40 years. They want to have they want to know a little bit more. They want to understand a little bit more about why things are or the way they are, and not just index their portfolio and watch it match the market and not have any idea why that's happening.
Yeah, I mean, and Collective 2 is also about radical transparency, right? So on the high end, you have investors that might be fortunate enough to be able to invest in a hedge fund. Well, good luck on transparency there. You send them your $1 million and you get a quarterly statement, or they tell you, hey, it's locked up for 2 years. And again, it's every 90 days they'll tell you what they might be investing in, but not any of the logic behind it or what's going on. Collective 2, every single trade is published there. If you're a subscriber, you can see them in real time. You can get them in SMS text. Again, these folks are looking to produce alpha, so they're typically working with instruments and trading things that would not be part of more traditional asset management portfolios. So yeah, I mean, I agree with you. There's a constant shift going on. I don't want to say that Collective 2 is for the entire part of your portfolio. Not at all. It's certainly the alternative asset, the risk portion of it. But yeah, I mean, people need to hone their own skills or take more control of what they're doing, and that's what we're trying to accomplish.
All right, Rod Casilli, he's the head of product at Collective 2. He's also an options trader. Rod, thank you so much for joining us today, and I will see you tomorrow.
Have a safe flight. Look forward to meeting you. Thanks.
All right.
All right, bye.
That is it for our show today, folks. Hope you enjoyed our chats with Rod and Paul, and a peek into our commercial break there earlier in the show. So that's it for us today. You can catch the whole show again on our podcast on iTunes, SoundCloud, and Stitcher. Also, you can listen to the show as it aired live, youtube.com/BenzingaTV. As I mentioned, will be in San Francisco for the next 2 days, so you're stuck with Joel and Dennis and Chris, who will be subbing for me on the board. So everyone have a good rest of your week, and I'll be back with you guys on Monday, but Joel and Dennis will be with you tomorrow. Have a good one.